Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap. And we've got some green on the screen. Stocks rising as we get new inflation data, as well as updates on U.S. tariff plans. Those appear to ease some concerns around inflationary pressures and global trade tensions. So looking at the benchmarks, we've got a Dow higher by 0.8%, 343 points up to 44,711. The S&P 500 climbed 1% to 6,115, and the Nasdaq Composite was the outperformer, jumping to 19,946, up 1.5%. For more insights, we are joined by Chartered Market Technician Mark Newton. He is the Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, thanks for joining us on the show again. Great to have you on.
Thank you very much for having me.
Lots to talk about, and I think what stands out from the session is the bounce in tech names. We've got Nvidia up about 3.2%, AppLovin on earnings up 24%, and we've got Tesla up 5.9%. What stands out for you in the latest session?
Well, today is actually a very important day. That meaning the 13th of February in the U.S. as we close this trading day. We're actually seeing breakouts in the S&P as well as QQQ today, which are very full and are bullish in my estimation. So we've seen the S&P get over 6121, while QQQ has managed to get up above the highs of its own consolidation in short run, meaning that it got up above 534. Both of those are important triangle breakouts for these indices that, despite all the work and higher inflation, that the market largely is ignoring all of this. And we are in the process of pushing high at a time when investor sentiment remains quite bearish.
Yeah, so we've got a couple of things that seems to be pushing up markets, at least for now. And there is a bit of momentum, it seems, behind Tesla in the latest session, up 5.9%. I know you've been tracking it quite closely. Yeah. Year to date, It is down 6.1%, but on the past 12 months, it's up 93%. What's your reading into the momentum behind Tesla right now?
Tesla has been under a severe amount of pressure the month of December when it peaked out, and so the stock fell from about 485 down to the low 300s. We did see a pretty good bounce this week at a time when we look at a time-based ratio of how the stock advanced from October through to December, it's exact on the way down as of this week. So price and time lined up. The stock has. The question is whether this is sustainable. There's still a lot of bulls and a lot of bears on Tesla, always quite a lot of communication and people on both sides of the aisle. I want to see it move above the area where it broke down technically. And so that's going to be 373, which is the January 2nd low. If that were to happen, that would give me a lot more conviction that Tesla a lower to move to the upside. Now, the stock has lost some momentum. It's not as attractive technically as other stocks like Meta and the ones that are hitting new all-time highs, Palantir. But there's a lot of investor interest in Tesla, and my view is it's going to take time. I want to be able to realize all the vision for Musk and see those fundamentals come to fruition. For now, the stock remains quite volatile, and so it's just important to have that in mind.
Yeah, lots of moving parts when it comes to Tesla. I suppose part of the equation could be tariffs down the road when it comes to what might be implemented between the U.S. and China. How are you factoring the potential impact of tariffs when you're approaching your markets right now?
I'm honestly ignoring all of that because it really has had zero effect on how the stock market is behaving. And until I start to see more evidence of firm tariffs in place that really shake the market, I really think it's important for investors to realize that Trump's message has largely proved to be a bargaining tool when it really is not as severe as what many make this out to be. And so, look, I think, many of us are free market globalists. We like to see trading among partners, but I think that, in the short run, this is more of a scare tactic. It really has not had that much effect on the U.S. stock market or many markets abroad, including what's happening with Europe that's at new all-time highs. So, I know it's on the minds of everybody, but I also say with regards to making money, one has to really separate the topics of investing with tariffs, because two right now are just completely on the opposite side of the spectrum. Markets are doing very well, but yet people have a constant fear of tariffs, and that fear is actually a good reason in the stock market as it starts to break out the new highs.
All right, on watch as well is what's happening with the U.S. economy when it comes to inflation. And we had a couple of readings this week, including the CPI numbers coming hotter than expected. What are you taking away from those numbers?
Well, look, I mean, if you take shelter and used new cars as well as auto insurance, those three components have driven the inflation since 2019. Out of the equation, CPI has barely moved at all. It's been up about 1.9%, since the last 5 years. So, just what happens with shelter. Shelter, in my view, has been seasonally affected, just like it was last January. I don't think that move could be as serious. With regards to the car insurance, that's a very real move. And so the question is, can we still see car insurance rise the amount that it has been every month? I know that can happen either. And I think, inflation generally has come down pretty sharply in the last 2.5 years. I just don't know the extent to which we can all worry about this, given that the tariffs are still very much an on. I think falling crude prices will help to offset some of that. And I also think a weak, fragile Chinese recovery also should help to export deflation to the rest of the world and can help to offset some of those concerns. So, I'm not really big on inflation going up dramatically. I think rates and the dollar are both going to sharp move to the downside in the weeks to come and start to move in the U.S. dollar. Very, very important to the downside. We're going to see big movement higher in the yen. I think we get down to 140 potentially. It's going to be a big rise in the Chinese yen. I think both sterling and euro also can move up meaningfully. So that's good for emerging markets, honestly. It's good for China. We've seen stocks like Alibaba approach big breakouts of its lengthy ranges. It makes me a little bit more optimistic about what's going on in the world. We see a short-term dollar decline and how the rest of the world can finally start to participate in this rally the U.S. has been enjoying for years.
All right, perhaps some reprieve for emerging markets in store. We've been in conversation with chartered market technician Mark Newton. He's the managing director and global head of technical strategy at Fundstrat Global Advisors. Mark, thanks so much for your time today.
Thank you very much. Happy Valentine's Day. Happy week all. Yes. Take care.
All the best to you too, Mark. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.